Hey guys, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. And today I'm going to analyze EURCHF. Not only I do analyze the pair, but also I explain how I find my best setups. Okay, let us start then. The first thing that I need to do, I am to look at the high time frame and identify what price is doing now. Okay, how do I identify that? I pay attention to market turns because market has only two conditions. It either continues the previous movement or it turns it into opposite. Only two ways the market may go in the next moment. So it either continues or it turns. Okay, so when it continues, but when it turns, this means that something changed in the market. So those turning points are very important while your analysis. These turning points are called pivots, support resistance zones. They are called structure. They are called, I don't know how else they are called, just turning points. So many names for this same phenomena that takes place in the market, and this phenomena is explained that the price just changed its direction into opposite. So something very important happened that made the price to change its direction. Okay, so if you look at the chart, you'll find plenty of those turning points. Something like that. We went to the downside, then we went to the upside, to the downside, to the upside, to the downside, to the upside. The problem is which of those turning points are significant and which are not. Which of them are major turning points and which of them are just noise. Okay, I have created a special system to identify a significant turning points and to filter noise, and I call it 9-candle fractal system. Okay, what is a fractal? According to Bill Williams, a fractal to the upside is a high that sticks out of its surrounding, like this. This means that it is a high that is higher than the two previous highs and two consecutive highs after it. On the left side, we have two highs that are lower than the high, fractal high, and on the right side, we have two highs that are lower than the fractal high. So this is the fractal formation as explained by Bill Williams. I came a bit further and I decided not to use 5-candle formation, 1, 2, 3, 4, 5, you can see it. I decided to use 9-candle formation. So for me, a turning point is significant if I have 4 candles before that having lower highs than my turning point, and 4 candles after that having lower highs than my turning point. So this is a significant zone, significant turning point, significant support or resistance. In the example right now, it is a resistance or a pivot or a structure or whatever you call it. I've done lots of testing, thousands and thousands of hours and years and minutes, and I don't know, I didn't test tick chart, I suppose, but tick chart is not very important. I tested dailies, weeklies, hourlies, and I found on every of them that the 9-candle fractal is the most optimal. If you have it larger, for example 11-candle fractal, just add 1 candle here, add 1 candle here, and you will have 5 candles lower than the fractal high and 5 candles lower than the fractal highs on the other side. So you will miss some good opportunities, you will miss some good turning points. If you delete some some highs, some candles, and you will be using 7 candles, you will detect more insignificant turning points, those that are not very helpful. So 9 candle fractal is an optimal according to my testing. Okay, as I said to you previously, in the beginning of this video, I am a programmer, so it doesn't makes any difficulty for me to write a code that will draw those fractals, that will draw the rectangles, to do this work automatically. So when I'm using my indicator, I know that I am 100% objective. Nothing of that kind. It seems to me it's a good turning point here, or it seems to me it's a bad turning point here. Just run my indicator and it shows everything. I call it fractal zones. What we have in the settings? We have the settings of the fractal itself. Left part of up fractal, right part of up fractal, left part of down fractal, right part of down fractal. 4 candles on the left, 4 candles on the right. And I wanted to use the information of the daily time frame. I wanted to draw rectangles on daily time frame. You will understand in a second why you need to set the time frame for drawing in minutes here. Okay, let me run it. As you can see, we have green and red rectangles. Those red rectangles are of course resistance, those green rectangles are support. And you should understand, once support is broken, it then turns into a resistance. And again, once support is broken, it then turns into resistance. Look left, structural excludes, and blah blah blah. Once resistance is broken, it then turns into a support. Here we have some kind of resistance. You can see this box. It was broken to the upside, and then we came back. Where we came back? Exactly to that box. And then we went to the upside again. It is very, I don't know, very old truths about support resistance you should know about. Okay, well, I have identified that the previous support was broken to the downside. We have a candle close and a candle lower than the previous support. And also we have a fractal high at the same zone coinciding with that support zone. So the previous broken support now turned into resistance. And what we see now, we see price is heading upside again to that zone. So if you guys know that price is most likely consolidate, then move in trends, yes? So it will most likely bounce of supports, resistance this way for some period of time. Then it will break them, showing some impulses or trends. So every time price comes to that resistance, it is higher probability, will have a higher probability that it will bounce than it will break it. So after I have identified that price is heading to my support or resistance zone, the next step is to make prediction. I am predicting that if it goes there, it will most likely bounce. Okay, so and now let's go to the second part of my analysis. Once the high time frame analysis is over, then I switch to my trading time frame analysis. My trading time frames are 4-hour and hourly. Okay, look at the 4-hour time frame. What I want to find here is the so-called advanced pattern formation. Why it is called an advanced pattern? Because once the pattern is identified, I can set my orders, stops, and targets in advance. The pattern shows me where exactly should I sell or buy, where exactly should I place a stop loss, and where exactly should I place my target. And I know what probability of the outcome is in advance. I know everything in advance. So as you understand, if I place orders in advance, they are either limit orders or stop orders. They are not market orders. I'm not waiting for some candle close or some violation of special level or some double tops or some other reasons for entry. My reasons for entry is advanced pattern formation. Okay, first let me explain you the advanced pattern formation I see in this particular chart. It is a cypher pattern. And it starts from our X to A points. We first identify XA. These XA points, X to A, install our first leg of the pattern. It is called XA leg, and it should be a impulse leg. An impulse leg. What is an impulse leg? First of all, impulse leg is the movement that violates some previous range. You see, we've been trading here. We had some kind of support here, and then we had a candle low and the candle close below that previous low. So we break some range. What's next about impulse leg? It is obvious. It mostly consists of candles of the same color. It is obviously downside movement. No doubt. And what's next? What is next? The movement before that, impulse leg, should be at least 382% Fibonacci retracement if you compare it to the leg itself. So if the movement were something like this, yes, if the movement were something like this, even this small movement would be enough. But in our case, we have almost 786 previous movement of the impulse itself. Okay, so these are the three main identification things of that XA leg. This is called an impulse leg. Once XA leg is found, then we take our Fibonacci tool and stretch the fibs. From X to A, you stretch the fibs. And then we look to a retracement to this leg, at least to 382 level. 382 level. Look here. We have one crossing that 382. It should at least touch, I mean the wick should be the same number that we have at 382. If it is 1 pip lower, then the movement is invalid. If it is exactly pip to pip, 0.07728, oh sorry, 1.07728, if it coincides, then it is valid. If it is more, it is of course valid. So this is the minimum requirement to coincide with that. If it is more, it is better. But it should not have a candle close above 61A. So we shouldn't have a candle close at or above 1.07951. So we have numbers here, the quote. So if you have a candle here and its close is at this quote or 1 pip higher, then it is invalid. If it is 1 pip lower, then the movement is valid. So even 1 pip can invalidate the pattern. Okay, in our case, particular case, we have it attaching 382, and obviously we don't have any candle close above 618. Okay, once we have these two, XA and AB leg, then we look to our CD leg. The CD leg is an extension. Why it is an extension? It extends past the first leg, extends past XA. So how far should it extend? It should be minimum extend to 127. At least the candle wick should touch 1.07110. You can see it. Obviously, we even crossed this line. But the candle close should never close beyond beyond 1414, and here we have a wick that is crossing that 1414, but a candle close is not closing beyond that. If this criteria is met, then we stretch our fibs from X to C, to the whole movement, to measure the whole movement, and our D point, which is the completion point, is the 786% of this whole movement. This D point should also be higher than the B point. If the 786 is somewhere here, 1 pip higher is a valid cipher. For example, we have that B point very deep. It was very deep, yes? So 786, when you stretch it here, it's not valid because it is lower than the B point. But if our B point is here, then it is a valid cipher. In our particular case, in this particular case, of course, we have a D point completion higher beyond that B point. Of course, we have it. So the pattern is valid. And now I will explain how this pattern is traded. It is an advanced pattern formation, so as you might have guessed, it is traded in advance. This variation is a bearish variation. We should sell it at 786. Sell it at 786. We should place our stop above X. Somewhere above X. You can use whatever above X, maybe 5 spreads above X, maybe 1 average true range above X, maybe if you enable 113 Fibonacci extension above X. I'm personally using the 786% of the target above the entry, and you will see how it works in a second. I will tell you about the target, and then I will come back to explain you my way of placing the stop. Okay, what is the target? The target is 382 from C to D leg, the last leg of the pattern. 382. Once this level is attained, half of position is closed, and the stop loss. Hey, hello. Stop loss is moved to break even. So you have a risk-free opportunity that is closed at 618. Sorry. That is closed at 618. Okay. I promised you that I will teach you how I personally place the stop loss. I measure the distance from the entry to the first target. Measure it this way with my Fibonacci's. You see, this distance is 100% from 0 to 100%. And then I copy and paste it to my entry. You see, I'm looking at 786. So my stop loss will be 786% of the target distance. Hey, come on. Here it is. Of the target distance. If you do this manipulation, your stop loss will always be above X, risking 786% to generate 100%. See what I mean? Hope you understand that. Very convenient patterns. No need to wait for breakouts, no need to wait for candle close for some confirmation and other stuff. It shows you in advance where you should place your limit order, where you should place your stop loss, take profit, and so on and so forth. It is a bit tricky, yes. You need to know how to identify XA, what is a good impulse and what is not a good impulse. You need to know the ratios, the set of ratios. What is the first ratio? What is the second ratio? What is the third ratio? You need to keep it in mind to check if the pattern is valid or not. And of course, you need to have a solid money management strategy in your mind. Where to place your stop, where to place your target, you need to remember those things. Well, I have simplified that work. I've created the program that searches for these patterns automatically and draws entries, targets, and stops automatically. So whatever person using it can have benefits without even knowing the correct set of ratios for the advanced pattern formations. And I will demonstrate you how it works. I have 3 variations of that program to identify large swings. You see, no valid patterns detected. To identify medium swings, it says no valid patterns detected. And to identify small swings. And you can see this same exact cipher pattern with the completion of 1.08004. This is also a round number. You have 1.0800 and some decimals. So 800, round number, psychological number, very important thing. You should pay attention to that. Stop loss above X, as I told you. The distance of the stop loss is 786% of the target. You can see it. If I copy and paste, you see the target is larger. The accuracy of the cipher pattern is about 70%, but if you combine with support and resistance, you will have even better accuracy. Or you can have even extended targets, having the same accuracy but with extended targets to 618 or 786 of C to D, because it coincides with the higher time frame analysis. What else you have in this program? You have information of that, how many pips you are risking and how many pips you are going to generate in case of winner. If you know how many pips you're risking in advance, you can set the proper position size. You say, okay, I don't want to risk more than $400 in my stop loss, in my every trade. I don't want to risk more than $400. Yes, so you say, if I have 34% risk, then I can trade a standard lot. If I trade a standard lot, my pip cost is $10 per pip, and if I risk 34 pips, then my risk would be 340 pips. That meets my requirement of risking less than $400. 340 is less than $400, and that's why I am going to take this trade, something like that. See how convenient it is. It tells you how many pips you are going to risk in this particular trade. So you use wise money management depending on your risk appetite, depending on how much you are going to risk and how much you are willing to generate. Okay, that's it. I explained you the rules of analysis that I personally use. I explained you the way how I identify the turning points, how I find the structure, support, resistance zones, and then I explained you one advanced pattern formation that is called a cipher pattern. I have 3 formations more. They can all be identified with these programs. I have 4 formations. They are ciphers, bats, Gartleys, and butterflies. The 4 advanced formation. what else? And in this video, I only explained the cipher pattern. If you wish to know more about other advanced pattern formation, just subscribe to my next videos. I will explain them when they appear in the market, when I have that good opportunity to show you a good Gartley pattern or a good butterfly pattern. I will explain it to you as well, explaining the ratios and showing how my program can identify them. So subscribe if you like this video, if you find it helpful, if you learned something new from this video. Please give me a thumbs up. I appreciate that stuff that you do. Let's develop my channel. Also follow me on TradingView. You can find me at www.tradingview.com/Alexander_Nikitin. This is my profile page. And also follow my trading group program on Facebook. It is www.facebook.com/groups/TGP, means trading group program. Take part in that group as well. I will give the links in the description. Until then, good luck, good trading. Hope to see you soon.